Hi, Craig. Welcome to the Startup Playbook podcast, and thanks so much for taking the time to be on the show today.
Thank you for having me, and I'm glad we finally put it all together after many months of planning.
Yeah, it's been a while trying to arrange schedules and all of that, and dealing with technical issues trying to get the show recorded. But yeah, thanks for coming on. Super excited to have you on the show. Obviously, you would be best known for your time at Airtree, where you're currently at. But for those people that are listening at home that may not be as familiar with your background or your story, or even what you're doing at Airtree, do you want to share a little bit about your story and what got you here today?
Sure. I always struggle where to start a story. I'm a country boy, I guess, is right back to the beginnings. I studied engineering at Sydney University. I started medicine and I went to civil engineering. My first part of my career was really building things, building projects like the Anzac Bridge and the Third Runway, some fairly iconic Australian projects, which is really about getting stuff done, organising people. There was some technology in there, but not a ton. And through a spate of kind of accidental phenomena, I ended up with my own business in Prague. I'm running my own construction business in Prague at the age of 25 years old. And then I sold that, not for much money, but for enough to pay my way through business school in France, at a business school called INSEAD. I left INSEAD and was a management consultant, a failed management consultant for a few years. I was a whiz at PowerPoint presentation for a while, but that really wasn't where my sweet spot arrived. And then I guess the sort of relevant point to where we are today is I then founded an online travel company called Travelselect in 1998. We were venture backed. We raised £5 million of capital from venture capital firms in Europe. We grew a business to 150 people. We launched in USA, Russia, Sweden, France, UK, obviously, and we were profitable when the market went to crap. And that was very unusual. We were very uncool in 1999 to have profits, but it meant we emerged with a real business. And so we sold that successfully to a listed business called lastminute.com. Everyone did nicely out of that, and that was my first real exercise of founding a company, taking capital, making a bunch of mistakes, and coming at the side with an okay outcome. And then I moved back to Australia with my now wife. We did a bunch of things. I met Daniel Petre actually, and we started investing together in personal angel capital really, and then we did a fund called Netus together. Netus was backed by Rupert Murdoch alongside Alison Deans, and we were really sort of half investing in local founders, so Australian founders, mostly building local businesses. That was kind of the ecosystem of the day. And we also spent a bit of time partnering with US businesses and bringing them into Australia. This is kind of the heritage we've come from here at Airtree. That fund was very successful, and that was one of the most successful funds in the country. We did great things for the investors, but more importantly for the founders. Most of the founders we backed went on to make good returns and get great outcomes for themselves personally. Many of those founders have since invested in our fund, which is how the world works. And then after Netus, I launched and I founded a business called zeebox. Beamly, it was a large engineering-led project across US, Europe, New York, London, Sydney, where we were trying to sync up TV with a second screen, sort of basically ingesting live TV and using natural language processing to derive meaning, almost keywords into TV. That was a colossal flop. We weren't solving a real problem, but I sort of learned a ton around product management and natural language processing and building community teams, and then really felt that the venture game was back to where I wanted to be. So Daniel and I founded Airtree in 2014, and I guess here we are today.
Obviously, you've had an incredible career to date. That's kind of taken quite a few transitions, but just something that I wanted to pick on was, you mentioned that kind of almost unexpectedly at 25, you were running your own business. At that time, did you, I guess prior to that, did you have an inkling that you wanted to start your own business or go into entrepreneurship? Was that ever a consideration or kind of a career path that you seriously looked at, or was that something that kind of just fell down your pathway and sort of made you realise that that's what you enjoy doing?
I really just fell into it. I have no role models that I in my family, my parents are academics, so I don't have anyone I can point to in my personal life. I think I've always been a fairly anti-establishment person and didn't really like the idea of working through hierarchies, and often would look at my boss's boss's boss and think, I'm not sure I want to be any that person. So I think I knew what I didn't want to do. It just really happened by accident, to be honest. I didn't know what I was doing. I had 65, 70 people in Prague and London on a payroll. I didn't know what a debit and credit was. I was really kind of making it up as I went. So I think it happened by accident.
Sure. And obviously, I guess the deeper that I get into the startup space, obviously I still feel very early in my journey, but I've been in the space for a few years now. And I just find that you're constantly learning new things. And what I find really interesting about your story is obviously you had Travelselect, which, had a successful exit and went through that process. But then after that, you had zeebox, which wasn't as successful. Again, really curious to sort of understand what were the learnings that you took from each company, and how do you sort of apply that to kind of the broader way that you look at business or potential investments?
Mm-hmm. Well, a couple of things. I think we all talk about learning from failure, which is true. I think you can learn a lot from failure, but I think you can learn a lot more from success. You get to do it for longer, usually, and there's a lot more sort of positive feedback loops rather than negative feedback loops. So I think that's as an investor or as a potential founder, I think one of the misunderstood elements is timing. Getting the timing right. When is the right time for business to take shape? I mean, travel's a very boring sector today, but if you look at some of the most interesting elements around product, machine learning, product development, it happened in online travel 20 years ago. I mean, Zoom has been run by two of my colleagues from Expedia right now. So I think that timing was right. It was just the right time. The learning from zeebox, it wasn't the right time. And we weren't really, to be honest, we weren't solving a real customer problem. We were solving a broadcaster's problem. The reality is when people watch TV, they do have two screens, but there's no such thing as a second screen. It's just the first screen is your small one. And so I think we hadn't understood the customer's problem well enough.
Sure. And I guess from a founder's perspective, it's often hard to understand the process that investors go through in terms of raising a fund as well. And so you've gone through this several times. You've recently raised a larger fund for Airtree as well. I'm just curious if you can share any of the process that you have to go through in terms of putting that fund together and what that looks like from your perspective.
Great question. I think that's not well understood, as you say. And having raised seed, Series A, B rounds on the founder side, and then done a couple of funds on the general partner side. There are some parallels. I mean, firstly, it's a very humbling experience. Secondly, it really forces you to think about what you are signing up for. What is the key message? Often you walk out of meetings and just think that doesn't work. Either a process or an investment thesis is not working. So I think your first pitch and your first is really your best, and you get better over time. I think the idea that you're kind of ultimately going to sign up for a partnership is also common between the two. When you take money from a venture firm, they're going to be your partners through thick and thin over 5-10 years. If you take money from a LP, it's the same thing. You want them to back you through separate funds. So I think it's a chemistry fit. There's doing due diligence on them, looking at their behaviour through the process, if you're lucky enough to have choice. I would say the complexity of raising a venture fund is much higher. It's a very complex problem. Your problem, it's a very complex raise. The structuring is different. So it takes a lot to get it going. I mean, our Airtree fund, which was really the third fund Daniel and I've done, we were lucky enough to get it away reasonably quickly. But our second Airtree fund, which was in 2016, happened fairly quickly. We're good at that sort of stuff now, and you can do that if you've got a good team, you've got a great track record, you've got a clear investment thesis. So in that sense, venture funding, raising funds is a much bigger exercise in the venture space, which is why you only do it every 3 years.
So speaking of that, you mentioned that this is the third fund that Daniel and you have sort of put together. From what I understand, Airtree's invested in 40 companies. I'm not sure if you know how many companies that you would have seen during that time, but it would have been a significant multiple of that. I guess again, really curious to know, has the way that you look at investing or the process that you go through evolved at all over the 3-fund period, and how does that sort of match up with what you're kind of seeing in the general ecosystem overall?
Well, I think certainly on both the process and the types of businesses involved, and I think that really maps to the maturation of the Australian technology ecosystem. I think process-wise, venture has cleaned up its act. There was a time when venture, when there was a surfeit of companies and not much capital, and so the process wasn't as competitive. It sometimes took longer. In fact, I like to think we avoided this, but there were certainly some term sheets and terms which were not very helpful for companies, and I think lots have been spoken about that. I think now the process is far faster. It's much more professional. It's a much more competitive process for great founders have choices. So as much as you're making a decision to invest, they're making a decision to invest with you. And I think it's healthy. That's a great thing. It keeps us on our toes and makes us really focus on what we can offer over and above capital. On the types of businesses, I think that really kind of maps to the sophistication of the founders and software. I think 20 years ago there was classified businesses and e-commerce businesses, most of which didn't work, but some of those classified businesses are still the unicorns of today, like car sales and the REAs and the domains. I think we then sort of move into marketplaces. I think we cut our teeth in marketplaces, going back to eBay. So I think understanding supply and demand, chicken and egg problems. There's plenty of good examples where you can build marketplaces both in Australia and globally. Through to SaaS businesses, I think there's an argument that SaaS is probably waning a little bit in terms of the ability to build a large SaaS business today. And now we're seeing much more deep tech founders, niche applications of artificial intelligence, robotics, quantum computing, laser-based Wi-Fi, so much more deeper technology-led solutions, which I think just reflects the sort of quality of the founders we're seeing.
Sure. Are there any particular, or is there particular mistakes that you see founders making consistently? So I guess something that that from an investor perspective you would love founders to know, but something that may not be as aware of when they go through the fundraising process.
I think that a lot of first thing is a lot of Australian founders. Most of our Australian founders are chasing large global markets. Still lack a bit of ambition. I think if you look at the market opportunity, it's usually massive in any global market. I think sadly being based in a continent in the middle of nowhere, we're still constrained by a bit of small thinking. I think there's a general misunderstanding of how venture works or how funding works. I think that's an education process which we spend a lot of time with founders, but I think there's just a lack of understanding how that works and what that dynamic looks like. And I think getting everyone comfortable with that is in everyone's benefit. I think there are two issues. There's many issues that founders face, but there are two I can think of. The big one, once you get into the building their business, is all about teams. It's all about how are you finding talent, how are you building a team, and how do you attract the right people to build world-class products and tackle global markets, competing with very sophisticated overseas players.
Sure. And again, from what I understand, Airtree invests from seed to Series A. What are the characteristics that you look for when meeting with founders? So a lot of the investors that I've spoken to have generally said, and again, from how open Airtree is in terms of sharing your knowledge and your information, that you want to meet with founders early. I guess, what are the things that make you interested from those initial few conversations, and what drives you to wanting to offer a term sheet to founders?
Mm-hmm. Well, I think you're right. We're one of our sort of key tenets is transparency. We've done that with sort of term sheets, sort of seeding, funding docs, Google Sheets with every single funder. I think we just think transparency will help the whole ecosystem, and that lifts all boats. We invest seed right through to Series BC, so we can write a $200,000 seed check, we can write a $20 million Series BC check, and more of that. So ideally we like to get to know a founder early and write that first check. That's where the relationship crystallizes, and then we support that founder over many rounds. That's why we have a large fund today. In terms of what we're looking for, really we love founders who have some sort of itch they're trying to scratch, some deep domain knowledge, some problem they've lived with and it's frustrated them for long, some sort of visceral connection to a problem they're trying to solve. And that then leads into some product sensibility. They either they have deep technical skills to know how to solve it, or a deep product sensibility to know they have a vision around what the software needs to do, the technology needs to do to solve that problem. So that's what we're looking for. A problem that matches with the founder's experience and set, and a real reason to solve that, a large and ambitious vision, a unique take on how to solve that, which you can really see in the sort of how they think about product or how the product's performing itself. They're the sort of attributes of things that gets really exciting.
One of the things that I've noticed meeting a lot of founders over the last few years is that the best founders tend to have this pull towards them in terms of bringing the best people, whether that's their ability to sell without having products, whether that's their ability to bring really experienced founders or co-founders onto their team. Obviously, Airtree has recently added a lot of superstars onto its team as well. I guess from your perspective of building out the Airtree team, and similarly for the portfolio companies that you have, how should they approach, or how do you attract the right people into your business?
That's a great question. I think we have an attribute set that we think about that makes a perfect founder. Nobody has that full attribute set. None of us have the whole set, but I think one of them is this ability to evangelize a product, and great people attract other great people. So that's a known. I think most founders we meet have something special about them that will attract other people. That's a sort of basic DNA.
Sorry, just on that, do you think that that's something that can be taught, or is that like an innate skill or ability that they have?
I think these sort of special qualities are sitting there now. They have to be there to begin with. I mean, I think what you can be taught is how to leverage that and how to use that.
Sure.
So it's not uncommon to find, introverted engineers who have an incredibly interesting take on the world. They just haven't managed to amplify that in some ways. And over time, you can see them evolve. They don't have to be strutting on a TED stage to make it happen, but they can attract other like-minded people. And to your earlier point, they can build some really interesting world-class teams around them. An Airtree, that I think the way I think about Airtree is we want to try and build a venture firm that's going to persist over many generations and hopefully is here for 10, 20 years' time. That's really, we have to solve the same problem. I think there's no such thing as Australian venture capital, in my mind. It's all global. With our most common investors are well-known US firms, co-investors. So we need to have people here who've worked on global platforms, who've worked on world-class products, who've worked in world-class venture funds. And that's why we've got, as you said, we've brought people back from overseas. Sadly, that's where you have to go overseas to find these people and find, have you really worked at a level where our founders and our founders team are going to aspire to get to.
I guess one of the things that we were talking about before we turned on the mic was how the ecosystem's evolved and how we're seeing sort of different cohorts of companies becoming larger and more frequency of these type of companies coming across. Is that is that a timing thing? Is that just we've built up enough momentum and enough people have been in the space long enough for that to happen, or do you think that there are specific ingredients again that have instigated that, and more activities or more kind of thoughtful action towards making those things happen to speed up or accelerate that even further?
I think there are. I think there's two dimensions there. So there's the globalization of companies, and there's a number of high growth, highly valued companies produced. 15, 20 years ago, most of the companies were really attacking local domestic markets, and that was just a reality where we were at the time. The borders, the cross-border trade wasn't as high as it is today. It's much more challenging for overseas firms to expand internationally. So what was the exciting thing is we see the majority of founders the vast majority of founders we back are global from the go-get. and that's just simple, large addressable market. The cost of startups trending to zero. You can attack a customer in Sweden and Sudan at the same time. That's a known. So I think that's just an evolution of the web in some ways. The other interesting point is just how many companies are reduced. So one of the things that we track is almost a cohort analysis of successful Australian startups, and by that we mean technology companies that are valued either $100 million and $1 billion. And you've seen sort of orders of two. If you look 15, 20 years ago, we were producing maybe $200 million companies a year that turned into a $100 million business in the future, and maybe $1 billion company every 5 years. You wind the clock forward today, we're reducing 10 to 12 $100 million companies every year, and possibly $1 billion company every 1 to 2 years. And so, that just speaks to the ambition of the founders, the ability to attack global markets. I think to some degree the sophistication of the technology talent pool in Australia and capital.
So again, you kind of touched on founders really thinking globally from day one. Obviously, Australia is in terms of a relative global landscape, a very small market in which to operate. Should all companies be looking to go global from day one, or are there particular situations? Obviously, in certain marketplaces, it makes more sense to win locally first. But I guess where do you sort of draw the line, and at what stage should companies be thinking about that?
Look, I think it's reductive to be sort of ideological about this. I think you need to be sort of pragmatic. I think what we love is founders chasing large addressable markets, looking to build some category-defining business. And it's true that most of those markets are global, but it's also true that they're very competitive. So you need to make sure you have a unique take on that. I still think there are some interesting domestic markets which are large and relatively attractive. Superannuation is a $4 trillion market. There's no end of opportunity in their health, education. We've got a business called Edrolo, which is going after the education space. In the fintech space, there are some great companies chasing multi-$100 billion market opportunities. Prospa is an investment we have, which is on the way to being a unicorn, and that's chasing a huge $150 billion market. So I think there are some large local markets which are attractive, and then that doesn't mean the company has to stop there. They can globalize. But I think the majority of our founders and the majority of markets do naturally globalize, and so you really have to go global from day one.
Again, one of the things that you mentioned earlier was the transparency that Airtree has, and obviously a lot of the resources that have been shared have been really valuable for a lot of the community. I guess that there hasn't been as much discussion around I guess founders really doing their due diligence, or really sort of understanding the value that VCs provide. When you're running a startup, you're often on a ramen noodle diet. And the lure of money can be really compelling, especially when you get your first term sheet. What is it that founders should look for from investors? And obviously, you've gone through this process and have been on this from both sides of the table.
Yeah, look, I think reality is when I've raised money, then my top three priorities are money, money, money. So I think I understand that, and we understand that. At the end of the day, the company's objective is to fund the business on terms that work for them, and so that's something there's an investor we need to deliver on, and that's something that I totally understand. That's why that's a top set of priorities for founders. But I do think that if you do this a few times, you do need to understand that you're buying into a partnership there, and that doesn't have to be restrictive and interfering partnership, but it means someone who's going to be there to support you in the crap times and to pat you on the back in the good times. There are different types of investor-founder relationships. For us, it means leaning in and really taking interest in the welfare of the team and the welfare of the business. Not being afraid to contribute to the conversation and point out where we feel things, that we can see opportunities that are being missed. Providing a whole bunch of value-added services. So I think that's what we think it takes capital, an amazing founder, a great idea, a stroke of luck, but also creates an ecosystem of support around a founder to make that work. And we're not all of that, but we feel like it can be some of that. So I think one of the things that founders miss is just trying to understand what else they're buying into and what else they can get out of a relationship. And I equip the VCs of the employees you can't fire, so do more employee reference checking than you'd ever do on any employees.
That's amazing advice. And again, one of the things that often comes up when founders think about fundraising is just, I guess, a lack of awareness and knowledge of what that process entails. There's still, especially from first-time founders, the impression that you have one meeting with the VC and they'll sort of write you a check, which, from what I understand, isn't necessarily the case in Australia. But I guess, again, from your experience of going through this with Airtree, what does a process generally look like for you from that first meeting to writing a term sheet? Yeah,
I think the ideal process is you get to know each other before you're raising, which is what we do with our investors as well. So the idea takes is an informal conversation, a coffee chat, or a chat over a beer around a product, an idea, just noodling around what could be possible, and then have some updates along the way, and then hopefully we can be helpful. And for us, we try and be helpful no matter who it is, whether it's people or contacts or ideas that might help that founder be successful. Once the raise process kicks off, then it should be fairly, from our perspective, it should be very transparent. There's a deck, there's a presentation, we try and get to quick no's, so we don't want to waste founders' time if that's the answer. If we say yes, we'll have a series of kind of clear questions we want to run down, and often it's really trying to understand the vision of the founder, where they see the possibilities in 3, 5, 10 years' time, the product, the customers. We're looking for a match between a customer love affair with that product and why that will persist over time. So we'll go deep into a number of areas. That can take 2 weeks. We have what's called a partner presentation here, where we think it's important for a founder to buy into the broader Airtree team. So in this room here, we have some 6 to 8 of the investment team in Airtree here, getting to know the founder knowing it's the broader team. There's a term sheet, and then we close 2 weeks later. So that can be a 4-week process, it can be a 6-week process. But I think from our perspective, we try and be very transparent about where we are in all those stages.
As you're going through those stages, what are you looking for, or what are the kind of points where you make that no decision? So I guess are there specific things that kind of come up from the first conversation to maybe a 3rd or 4th meeting that kind of push you to go, that was interesting, but that's potentially not the right fit? Yeah, we
do try to get to quick no's because we don't want to waste people's time. So it doesn't always happen, but that's our ambition. I think reality is we invest. We probably say no 99 times out of 100. That's not because we're trying to be jerks about that. It's just we're trying to look for things that fit our investment thesis, and we usually have very tight thesis about where the world's going and where we see the opportunity set. So I think that the reasons that things don't make it to the bar is, sometimes there's the market's too small. We don't think there's as good as fit between the founder's vision and the capability set. Sometimes the metrics just aren't there to show that the product market fits there. The unit economics are not working. There can be all reasons that just doesn't make an investment. Still be a great business. It's just not investable for us.
Sure. And finally, from an investment standpoint, what would you like to see more of in the ecosystem?
I think we would like to see more, 2nd, 3rd time founders coming back in. As I said earlier, you learn a lot from failure, a lot more success. I think that really reduces the risk and increases the opportunity set for founders. I think we're beginning to see that, but I think that would be really useful. More, deep tech use of AI into large ambitious markets, particularly large markets where Australia's got an opportunity to punch above its weight. Where your first 2-3 clients are going to be marquee clients on the world stage. Mining, agriculture, construction, financial services. There's some good examples there. We could build a global business by if you've got your first 2 customers are Australian in those 4 markets, you're going to have some great references, and some customers are going to push you on the product side. And I think it's a real opportunity for Australians to Australia to punch above its weight there. I think more going back to the earlier is more ambition, chasing large opportunities, thinking beyond, can I build a $100 million business to large opportunity sets and they may not get there, but I think that vision and that, as long as it's properly directed and it's kind of well thought through, means that we'll see even more billion-dollar companies emerge from Australia.
Fantastic, Craig. Once again, thanks for coming on the show. It's been great to chat. For anyone that wants to find out more about Airtree, say hello, get in touch with you, what's the best way for them to do that?
You can get us at me at Airtree, at craig@airtree.com. You can get me on Twitter at Craig R. Blair. We're doors are open, we're transparent, open. Just give us a call or drop us a note and you can come in and tell us what you're working on.
Fantastic. Craig, once again, thanks for coming in.
Thanks, Rohit.
Cheers.